Welcome back, guys. All right, how you doing? Wow, market took a tumble today. CPI came out a lot worse than a lot of people expected. On this show, we were short-term bullish. However, we knew the risks, right? Long-term, still on the corrective side of the Elliott. Market psychology is about to turn. I believe that we're skimming the bowl. However, we're not out of the woods yet. Um, you know, we're trying not to FOMO on the big pivot, right? And if we're on the bottom or we're discovering bottom, there's going to be a lot of opportunity to find the rise before it really shoots up. And you guys, if you follow me on Twitter, you know where I stand on that. It's really going to take some type of regulation to really enter the space, and then you start seeing extreme pivots in price. But until then, this is the opportunity that we've all more or less been waiting for. These are the rock bottom prices, that could really, really turn things around for holders. And on this show, we like to look at charts. We like to look at dailies, short term, midterm, even long term. And then we get into some news and things like that. But today, with the market being aside from ripe with opportunity, I wanted to kind of lighten the mood, or at least, I like to address new users and provide some informative and good resources for people who are looking to make their first investment in crypto or just recently entering the space. But I also want to keep it relevant for people that are in it and currently deep in it too. And the best way for me to do that and provide to you guys good information is sharing resources. So what I thought I'd do today is we're going to take a quick look at CPI before we jump in, kind of give a preface to what is about to happen. But we just want to run around the blockchain a little bit, right? We want to run around YouTube and check out some other people, some people that I enjoy watching, some people that are entertaining, and see what they have to say about some recent the recent news and just with everything going on recently. So let's do that. All right. So yeah, CPI weighing in hard, right? And market reacted. So clearly, if you follow me on Twitter, you know where I stand on this. But it looks like whoever's in crypto got a lot of weight to move some market cap. So we're watching macro now, and regardless, we're not trying to apply logic. We know crypto is a real asset. And it defies inflation. It's an asset, should be very, very resilient to these things, inflation and things like that. That's why we got in. But could whatever it is, market reacted to this, and this is otherwise good news for Bitcoin and non-inflationary real assets. However, this is where we are, so we're gonna roll with it, right? We're not gonna fight it. And these are the times where we can step inside the arena with the big dogs, right? And here we are. So yeah, CPI way up higher than what we thought it would be, 8.3. And we covered some of this earlier in the show, several shows ago, about being at 8.1. We did figure out that we're 8.3, but the problem now is that a lot of people are speculating, which is, why weren't we speculating a little bit earlier about this? Because these numbers aren't really any different from what we are already projecting. But now possible 100-point hike, that's closer to upwards of 3%. Coming from Powell, and we should hear that on that news within the next 1 or 2 weeks. And yeah, and then so now we're seeing the dollar skyrocket after a solid move down over the last 2 days or more. And that could be against the world market as well. Other markets putting money into the dollar, because we're seeing other stocks and assets react. All right, so with outflow and inflow, just a quick look. I want to show you guys again a preference before we start getting into some conversation here. Here's the Bitcoin outflow on exchanges, and you see here a massive move right down on a trend, and that's coming from an outflow, spikes in outflow, leaving exchanges. That's usually followed up by huge amounts of inflow. Are these liquidations on exchanges taking in big amounts of Bitcoin off of? This is a serum, but are these are these exchanges taking in big amounts of Bitcoin after liquidations? So, or is this just price gaming? Just something, food for thought, right? So let's look at that outflow, May 22nd, or May 9th, May 12th, June 14th, June 16th, out in May 8th, May 10th and 11th, May 14th, June 12th, June 14th. So preceding and prior, big amounts of inflow and outflow on exchanges. And how does that correlate to price? You can see here, massive dives, moves up, massive dives, move up, and sideways trading. So somehow, in some way, either people are still having confidence and waiting. There's big amounts of liquid waiting on the sidelines, jumping in every time there's a massive dip. Or are there other things involved? Either way, this is a good sign, right? That we wanna be rolling with those moves. We wanna flow with the market. And so that leads me to Soloway here, who's really solid, got really solid views on charting and TA. I like to hear his point of view, and I like what Altcoin Daily does. So I check in on this show from time to time. And I like this excerpt here from him, previewing a few days ago the position that we'd be in today, or somewhat around this time.
At the Ethereum chart, and before we get into what you project for the future, just take us through these last few months and share what happened, and did you expect this, or was it more bullish or bearish than what you expected?
Yeah, so the Ethereum chart, it basically did what you would expect it to do in a bear market, which means that percentage-wise it fell more than Bitcoin, but generally it goes up in bull markets percentage-wise more than Bitcoin as well. So it kind of kept that thing going, which is what we saw. Now we did see again a low put in right around this, just sub 900 level, and it rallied all the way back to 2000. And you can see right here why it stopped right there on a dime. You have this sideways chop and this little pivot high, put a trend line in there, price literally just tagged it, and then we saw a pullback. Now again, as we creep into the merge, you're seeing some people buying, but I also think there's a lot of people that are just sitting on the sidelines because it is a risk, right? If things don't go well, you could see a dump in Ethereum's price. I'm in the belief that they've prolonged this kind of merge and kind of double check, triple check, quadruple check, where I think it's going to go smoothly, and I think you might see a relief pop once it's kind of completed. So again, I think overall you can see support is right here. This is around the 1450 level. Resistance is around 2000. If the merge goes smoothly, I think it could pop maybe as high as the double top here back to 2000. This is the 200 moving average. That would be your resistance line. I ultimately think if Bitcoin's going down, and I think risk assets will see more selling, Ethereum probably will have another leg down to it and at least retest the lows around that 880, 900 level, maybe go lower. So I think, again, shorter term merge, if it goes smoothly, short term bullish. Once you get outside of that, then I would be very careful. I wouldn't be someone who would be buying on the completion of the merge, because I think then again you might have a sell the news environment and a little bit of a pullback off of that.
Yeah, I like that insight there. I agree. If you've been following our show here, we've been saying the really pretty much the same thing. I think the market is waiting to see what happens with the Ethereum 2.0 upgrade. In other words, how it affects the chain for one, its operational, how it operates, and what functionalities of ETH, as we know of, are changed or affected. So I think I agree with this overall. I think right now though, and this is against what he was saying just a few days ago. So I'm sure at this point, his chart side insight would be changing as well. At this point, for me, I think stochastic deviations are really important right now because the fluctuations that we're seeing are not really related to chart activity as much as what I mean by that is it's a lot of the macro, a lot of news outside of charts, outside of what math is trying to tell us what should or what is going to happen or what's being caused as an effect. Yeah, I think deviations are a good way to view TA right now on the chart approach because that'll give you a good insight as to historically what happens when certain dips happen. You know, if we're going down a certain percentage, what happened after that certain amount of percentage on the average, or more often than not. I think those are giving you better clues and better insight on how to navigate this current market situation. So, Gareth Soloway. All right, fun channel if you're into this sort of thing. But I like this excerpt from him.
Don't tell me the Dow dropped 300 points. I'm telling you, we were set up. We were set up. I thought when everyone agrees on something, when everyone thinks one thing, we're gonna do one thing.
Crypto face. Embodying the least likely is about to occur. Excellent options trader. Really fun guy to hear talk, and extremely insightful, and a fairly, if I don't mind saying, relatively young guy, but very wise in trading. So good person to get some information from. CryptomanRan, another one of the shows that I really enjoy. I really like the way he approaches opportunity in the market. I think another very insightful guy, and I enjoy that he's opinionated. I'll put it that way.
Bear markets. For bear markets, you always get this range trading. It goes on and on and on, and it starts to bore you.
And by the way, so he's talking about that range between 17.5 or about 18 to about 25, and that's if you follow me on Twitter, that's exactly what we or I keep saying we as in the royal we, but I noted as would happen, I believe in June 15th, which at the time Bitcoin was probably 31,000, between 27 or 28,000 and 33,000 at the time, and that was before a few days or more, a little bit more, Bitcoin fell to about 17.9, the lowest point locally, which is the lowest point for quite a while.
People actually don't capitulate because of the price action, but they capitulate because of the lack of real price movement. So get used to this, guys, because this is going to be a marathon. It's not going to be a sprint, but it's a good trading opportunity because if you know this, every time it gets to the 18,800, 19,000, wherever it's been in the last couple of days, here you go, 18,649, you buy it, and you kind of know that it's going to get up to the top of the range at some point, right? So that's what's happening on Bitcoin. Then we look at the NASDAQ. The NASDAQ is getting absolutely slaughtered. It's down 5%. 5% must be one of the worst days for the NASDAQ this year. Maybe not the worst, but definitely one of the worst days for NASDAQ this year. So bloodbath on the NASDAQ. The Dow Jones, look at that big red candle. Up, down 3.21%. Now trading at 1,041 points down. That is huge. I mean, that is...
If you notice here, we had 3 of these measurables coming down. Well, this is about almost half of this, but we had some similar situation here and briefly. So we're definitely, pretty clearly on the corrective side still on the Elliott. Market psychology is in serious sell-off mode, and we mentioned it on the show. Barring any kind of extreme macro situation, I didn't foresee CPI being this reactionary worthy. However, it's kind of making it pretty clear and setting a precedent that a lot of what is in crypto right now is trying to set a narrative, and that's that crypto is not as resilient as we want to believe it is to inflation, which is totally not the case. That's the truth is totally contrary to that. However, the market is setting something up, and we're approaching max fear. And with this sort of impulsivity in the market, it really heightens or exaggerates the corrective side of these values on this market psychology, which is outlined by the Elliott wave theory right now.
Is a huge bloodbath for the stock markets. And then because of inflation, this chart, which had broken through the parabola, remember this chart that we said has gone parabolic, which is the Dixie, broke through the parabola on the way down, and today we've given back all those amazing gains. I was kind of hoping that we'd get down to this level over here and it would break down this level, but that would only happen if the inflation numbers went our way, and the inflation numbers never went our way. In fact, I was totally wrong about inflation. I wasn't the only one who was wrong. In fact, lots of people were wrong. So I thought...
Yeah. So, I mean, even if you did expect inflation to come out as bad as it did, and like I mentioned, we're looking at the earlier reports and earlier projections earlier in this month and even last month, and it was right around what was actually announced today. So not totally out of the ballpark. However, the reaction was totally out of the ballpark. All right, cryptocurrency news guy, pretty fun. Not as well known maybe. However, very, very insightful guy. Surprisingly knowledgeable, and I don't mean that in a bad way. When you listen to him, he can go on for quite a while and really bring up some really interesting points. So really worthwhile person in my humble opinion to listen to.
Inflation numbers. Inflation is actually quite a bit worse than I suspected. Massive drop off, essentially, like right when the report came out. Probably going below 20,000 again. We're down 1,296 points. Still at 31,000. Everything is dropping like crazy. I have a feeling this inflation is completely caused by price gouging and not really like price of materials. Because I don't think like the price of materials, especially gas, is any higher than it was. I think this is pure price gouging, pure corporate greed. But there's really not much you can do about corporate greed because, greedy people will be greedy. And unfortunately, there's just not much you can do about greed except pwn it, but you can't really pwn it, so you're kind of screwed. Either ways, the Dow Industrials are actually down 1,296. It drops every time I look at it, and crypto is dropping right along with it. We're down 9% since yesterday, and pretty much everything has actually dropped. Pretty much every single thing has actually dropped, unfortunately. Some things are down way, way more than others, but generally everything is actually down. Definitely not any good right now. Most definitely not any good right now. Some things are holding on a little bit better than others, but like the further you go down the list, it seems like the more red everything is. Bitcoin has dropped nearly 10%. Ethereum's dropped around 8%. XRP has dropped about 4.6%. BNB's dropped around 5%. So things aren't hanging on all that well, unfortunately. The inflation rate was 8.3%. And the predicted rate was 7.9. But that's not the full story. The thing that I'm looking at the most is the core CPI. And the core CPI actually went from 5.9 to like 6.8 I think, or 6.1, one of those. And that was that's not good, because the Fed is going to act more. The Fed is going to act more on that core CPI than anything. So now they're talking about the Fed raising interest rates by a full 100 points now. I still think it's going to be 75 basis points, but the Fed's definitely going to be very, very aggressive on interest rates. They're not coming down anytime soon. I think the only direction they're going is up. But we do actually have they do actually. Yes, the Fed wanted to raise rates in 2018, but Donald Trump actually did convince them somehow to not raise rates in 2018.
Yeah, cryptocurrency news guy. It's also good to mention and keep this in mind too, with mortgage-backed securities. In times like these, we have what's called quantitative tightening, usually practiced by Fed to let go of mortgage-backed securities into the market and potentially let money flow back into other sectors. And right now, with a potential housing crisis or housing issue at hand, not going to be super enticing. So yeah, a lot of macro issues to deal with. However, on the show, you hear CC News Guy mention that 7.9 was a projection. However, on our show, we looked at something that was telling us actually something that was pretty much the same amount. 8.1 to 8.3 was a projected amount that we were expecting to see, and it looks like we got it. And I do probably fall on the optimistic side that 75 points will still happen, not 100. The speculation kind of came out of nowhere. I mean, like I mentioned, 7.9, 8.1, 8.3s. I mean, that's maybe on a very, very large scale, if we're looking, at that in that way. Yeah, that's, even those small percentage points can be huge amounts of money. Overall, no one was saying 100 points speculation at that time, when there were reports already projecting 8.1 and 8.3. So yeah, max fear, max FUD just around the corner and pretty much in it right now. Cathie Wood, not to call Cathie Wood traditional in any sense, but she's made her way in that market and had done very well. So at least in my point of view, I could be way off, but it's refreshing in my opinion to hear someone like Cathie Wood, who's a really solid and successful investor and has a good eye for especially good eye for investments, and particularly in tech. So always interesting to hear what she says, and especially coming from, as I mentioned, somewhat outside of crypto, but she's very much in it. Points of view.
Of Powell's speech yesterday, and tell us what that pivot might look like in the coming 3 to 6 months.
Yes, well, he repeated what he said in Jackson Hole, essentially. They're focused only on prices. Now, they have a dual mandate, employment and prices. Frankly, I'm happier that they're focused on more of a price rule, so that's good. But I think the reason for the pivot is going to be a massive amount of deflation in the system. It's already here. If you look at commodity prices, the gold price, for example, it actually peaked in August of 2020, and it's at the lower end of the 2-year range, while copper has broken down, oil is breaking down, lumber has crashed, iron ore as well. Freight rates out there are suggesting that the supply chains are loosening up quite significantly. The rates are coming down. So we've got deflation in the system. And the way I describe what's going on right now, I was in my early days in my career in the early 80s when Volcker was taking a sledgehammer to inflation because it was embedded in the system after 15 years of profligate spending, Vietnam War, Great Society, and then going off the gold exchange standard. A sledgehammer, that's what he needed. That is what I believe Chairman Powell thinks he needs. And we just don't think that's true because we see so much deflation. And then one more thing. We also see a massive inventory overhang around the world. You've got Europe in recession, China in recession effectively. And here in the United States, retailers are bulging with inventories, which will have to be cleared with discounts. So we think we're going to see some major downside surprises in inflation during the next 3 to 6 months.
Yeah, so many important points there. Want to get your take on what this means for the macro story. First off, on inflation, will the Fed be able to reach that target of 2%? And when do you expect the Fed to see inflation at these targets?
So the Fed is looking at the PCE deflator, which peaked in February at 5.3%. It's down to 4.6%. And we believe we've already seen some negative numbers. Nobody believes them. We do. And we believe we're going to see some more negative numbers during the next 3 to 6 months. So wouldn't be surprised to see it well down into the threes in the next 3 to 6 months, if not into that 2 handle. And I think if we get enough sequential declines, that the Fed will change its tune quite dramatically.
Wow, that is a big deal. You're talking about 2% inflation within 3 to 6 months over in the coming year?
Well, I think that the Fed will be looking at the sequential numbers, many of which will be negative, and that will encourage them. Even if we don't have that 2 handle, we're in the threes and we're coming down quickly, I think they'll change their tune, and perhaps they will take interest rates up 75 basis points this time, but the next time 25 to 50 basis points, and then following that, we shall see.
And this expectation that we would see a pivot, that the Fed would blink, essentially spark that pretty good rally in the month of July. But what is it going to mean for the macro story, Kathy, in your view on profits? Because we've got the second read of the second quarter GDP coming, showing a contraction of 0.6%. This after a 1.6% contraction in the first quarter. Tell me what you're expecting in terms of the profit impact here and the impact of the Fed slamming on the brakes, pivoting here, and impacting the macro story.
Sure. Well, we think profits are going to be under tremendous pressure, and until some of these cost declines make it through and inventories are cleared. Now, we do not think this will be anything like 08, 09, which I know many people fear. We think it's much more of an inventory recession and a drag from the rest of the world. Europe being crushed by energy prices, China being or readjusting to quote-unquote common prosperity. So I think it'll be more of an inventory recession, and there's been a lot of denial that we are in recession. We think we are. We think it's an inventory recession and that we'll be coming out next year, whereas many people, forecasters are saying we'll be going in next year. So I actually think the market will be looking up as we're exiting this year.
Do you worry that Larry Summers will ultimately be right? The other day he said, look, all of this focus on slamming on the brakes is going to mean unemployment at 6.5% at some point.
Yes, well, we do think there's been some labor hoarding in here. The employment numbers have looked strong. If you peel the onion a bit, the underbelly of employment is not strong, with household employment essentially flat over the last 4 to 5 months, which includes a lot of small businesses. That's where we see a lot of the pain right now. But the labor hoarding is because companies couldn't get labor during the supply shock and the COVID. And so now that they can, they're holding on a little longer than I think they would normally. I'd be surprised if we go all the way to 6%. I do think the inventory recession will be somewhat sharp and will take the unemployment rate up, but I'd be surprised to see us get all the way to 6%.
Kathy, your work...
Thing to know about Kathy Wood, she's pretty much always right. And let me clarify, I don't mean that she's outside of crypto. As I said right before the video, she's definitely in it, but she made her way much sooner than a lot of the voices that we listen to inside of crypto. So she's extremely insightful inside of crypto, and overall, the reason why I believe that what she says is important with macro, and it concerns crypto as well, is because the signs are telling us, whether or not we hear from major financial markets and major or more prominent financiers that we're not in a recession or anything like that. The market is saying otherwise. And, when she's mentioning, we hear things about buy commodities all of a sudden, and she's mentioning common prosperity tightening, small businesses and employment is feeling the pain. And in those areas, in the middle sector, there's usually a reason why. And we heard CC News Guy mention that a big part of the inflation is kind of convoluted in that the price was price gouged. And so inflation is exacerbated, where it looks worse. However, it is bad, right? And but the thing to know about Cathie Wood is that she's one of the few prominent people in finance that has been saying we're facing deflation, at the time, even well before we were reaching points of inflation, and you heard it more commonly. Just a handful of people were saying get ready for inflation, and she was saying it's rather deflation. And what's to note about deflation versus inflation is that deflation, we really haven't faced deflation in the US, more or less, as opposed to the rest of the world. Inflation is something that we've managed several, in times in the past, but deflation, not so much. So if anything is going to be, worthy of a worry factor, it's what she's talking about is, inventory pressure when buying and selling pressure are still heavily weighted on both sides. The market is still ready to get in, but we're in massive sell-off mode because everything is really touchy right now. So on contrast, going from Cathie Wood, let's jump into some inside crypto conversations. And I take it as you will. I enjoy the around the blockchain segment of Bitboy's show because it involves multiple people, and I used to enjoy me some when I had more time for it, some around the horn and type shows like that on sports, and First Take and things like that. So I enjoy this segment for sure a lot. And I think this conversation was really interesting, and it struck me today, and I wanted to share it with you guys. But somewhat contrasting ideals, but overall, I think they're coming from the same point of view. And see here, Joe Perry and Cowboy of Crypto, Aaron Mamuya, two guys who've seldom been on the show here and there, but I like where they're coming from, and more or less, I agree with both of these points of view. Yeah,
21 million coins. That's it, and it's a quote unquote safer haven for that. So, will it hold 20,000? Is anyone's guess. I mean, I'm a little bit nervous, certainly, because the market reacted the way that it did. It will be interesting to see next week what happens with the Fed and what they do. So I would definitely be paying attention because we're seeing some volatileness. Again, I mentioned this on the last stream. Traditionally, September is a very red month for crypto. So this is, like I said, a little bit par for the course. Fingers crossed here. But I'm still in the camp of that the bottom is actually in, and that we might actually just be trading sideways here until we kind of work through September and start getting some better news. So there's not all lost yet. There's still a glimmer of hope for everybody, not financial advice.
All right, Cowboy, you're shaking your head. I'm guessing you don't assume the bottom is in. And what is that what you're shaking your head about?
That's right, yeah.
All right, what levels are you looking at? Is it that 9, 10, 11, 13, 14 range, or are you super bear saying maybe even 3K here?
9, 10, 11, 13,
what
14?
Levels? That's a crazy question. The levels is as far down below the earth as possible. Look, Bitcoin
negative money.
Crypto markets are... What was that?
Negative money. You'll pay me to take your Bitcoin. Sign me up.
Negative money. Look, crypto is more testy than a hungry wife, okay? So we should be anticipating all this type of FUD, all this type of news, just messing around with Bitcoin. If Bitcoin and the crypto markets could be adjusted by some kind of tweet, we should be expecting all this type of FUD hitting. And there's really two reasons why you would buy into crypto or Bitcoin at all. One is tangible. You think that it's going to be worth more now than in the future. Or two, philosophical, that you are here in it for the long run and you opt out of the future agendas that governments and central bankings have, that you don't agree with that, and that's why you buy into it philosophically. You buy into crypto either one of these two ways. You either think that it's going to make a lot more money, or philosophically you just opt out of centralized everything, and that's where I'm at. And I fluctuate between both. And so when you buy into it tangibly, when you think that it's going to go up, you start seeing as 9% as a big move, a big shift, like, oh, we're going to get destroyed with 9%. 9% is the equivalent of me cutting my fingernails too shallow. Okay, that is how it affects Bitcoin. It doesn't affect Bitcoin. It shouldn't affect Bitcoin because, and especially Bitcoin, because of the crypto markets, right? Because we're in it for the long haul. All of us here, we're going to be wealthy. Okay. If we're in it for the long haul, we're going to be wealthy. If we're trading, we're asking for a lot of trouble.
All right, I do want to push back. Sometimes you cut your fingernails too short, and it stings a little, right? Sometimes
it stings a
little.
All
right, all right, Brad. I'm gonna bring this one to you because we're closest in age here, and so you've seen some bad inflation actions by the government. You've seen bad inflation, just generally speaking. We're at 40-year highs. I'm guessing you're probably a wee toddler around that age, maybe a little older, but I want to ask you the question. Joe brought this up. This inflation number, I'm long-term bullish. Why? It's a good hedge against inflation. I agree. I brought this up before. When will a bad inflation number or inflation being really high equal a Bitcoin pump? Because right now we get bad inflation data, entire markets dump across the sector. When will that change? Is it next bull run, two bull runs? Is it 50% global adoption? I mean, is this never happening? When will inflation bad equal Bitcoin good?
I think we're a long ways off from that, unfortunately. I just don't think that the average public understands the numbers like we do. They don't understand that Bitcoin is the digital gold, that it is the hedge against inflation. Yet, right now, as I've talked a lot about on my channel, the reason that the markets are acting so bad is because in trying times like this, in uncertain times, the money goes into more safe assets. The more speculative assets get crushed, and gold is considered to be one of the safest assets there is. And unfortunately, people don't realize that Bitcoin is even better than gold, that it's safer than gold. Yeah, it's got some more volatility, but long term, you're going to make a lot more money and you're going to preserve your wealth 100 times better, in my opinion, by holding Bitcoin than you by holding gold and assets like gold and silver, those assets that 10, 15, 20 years ago were the hedge against inflation. I just don't see those having any value compared to Bitcoin in the current market conditions. But once again, this it's all about education. That's why we're here. That's why we do these shows.
All right. So, Brad Varnell finishing it off for us. But you guys hear the difference between Cathie Wood and our esteemed guests around the blockchain. We in crypto are hyper focused on the value of it, right? And we're not wrong, I don't think. But with someone like Cathie Wood's approach, and someone that I'm gonna feature in a couple of moments here, their take is all incorporating. And I think in these sort of times, it's pretty important to have that frame of mind, to build your exit and entry strategies around that. Sometimes we get in because we know something's gonna pump, right? Or we feel it, or it's just a good investment, whether that be Solana or Phantom or Binance. We know it's deflationary, so it's got to go up, right? Those sort of things, which is fine. And you still want to build an exit strategy around that, and usually it would have to be a price. But sometimes you get into something for like a blockchain because it's focused on gaming, and But then if that's the case, or if you're getting into crypto because you believe gaming is going to be huge, then the next investment you make, if it's game related or gaming centric, then you should form your strategy, your exit and entry strategy around gaming. If you're going to invest in blockchain X, because they're building out a gaming platform, how long are they saying it's going to take? Are you going to give it? You should put your own time frame on that. If they say 6 months, are you going to wait 5 months or 7 months or exactly 6 months? Are you going to be waiting on their word in that case? What if they start delaying? So you need to build a strategy around that, and that should also often equal a price. So give it 6 months. If they're done with the gaming platform in 6 months, before your investment hits a certain price, then you reevaluate at that point. But if you reach certain price before the gaming platform is done, say like within 4 months, and it pumps, price pumps like above $50, which was your target to begin with, and you got in at $5, then you should stick to your goals and then reevaluate, because this market, especially right now, maybe, in almost any circumstance, but you should definitely, the point is you should have exit and entry strategies in this more or less volatile market. And I think that's what an all incorporating opinion is sort of leaning towards, right? As we're in crypto, we tend to be value centric. So we know it's going up, right? So we're in it for the long term, or philosophically speaking, we're in this, right? Or, we're against, the traditional markets and what it's been doing. And that's why we're here. So if that's the case, then you're not really looking at price, right? You didn't get in because of price X needs to be matched. I thought I would change it up really quickly, but CZ, we talk every now and then about Binance and CZ. I think he's a great voice in crypto, excellent leader for the Binance chain in particular too. But overall, really positive impact he has on the entire crypto market.
There has been, since a pickup in crypto crimes, a pickup in crypto bankruptcies. Can regulation solve any of these things that continue to pop up?
Yeah, thanks for having me, Brian. I think regulations will help to reduce the occurrence of them and also introduce more transparency into the market. But regulators, I don't think any regulator will promise you they can eliminate that problem. Even in regulated markets, bankruptcies happen, companies go down. I don't think it will eliminate that problem.
Will the hacks that we've seen so far for companies like your own, for other players in the industry, are we going to see more of a concerted effort to really kind of get ahead of, and I know that you guys have been doing this for years now, but at the same time, it just seems like they're coming even more fast and furious. What types of mechanisms and changes are you putting into place to counter some of that?
Sure. There's a few different types of issues that we need to deal with. Security hacks, that's a huge topic. We won't be able to cover much of that. And we invest billions of dollars on security alone. The other types are the other hacks, like, the bugs in software, etc. That happens on DeFi smart contracts, etc. Again, I think the industry will learn through experience. You can't avoid all problems while you're innovating in a new industry.
Well, and there have been so many problems across, as we've been talking about, right, of a lot of different flavors. And you guys, while you're in discussions with regulators, you're also under investigation from some regulators. Does any of that pose an existential risk to Binance?
Well, let me make one correction. There's no official announcement from any regulator with investigations on us. So there was some news sites have published similar things like that, and other news sites have published things correcting them that they've used the America's Freedom of Information Act. There was no investigation per se. We do communicate with all regulators all around the world, and they do scrutinize issues that happens in this new industry. And I think that's a very good thing, because that's how we learn, and that's how regulators learn, and that's how some of the regulations will shape up. So today, there are more scrutiny on stable coins. There are more scrutiny on many things in the industry. But I think those things are good because this is how we develop as an industry. So we maintain that very open communication, and many of the regulators want to learn from us because we are the player operating at scale. We like by most metrics, we're the largest in the industry.
CZ, excellent. And to go off of what that last reporter, how she put it, was that there's so many issues with crypto and we see so many problems, right? Those are the outside crypto voices that I guess sometimes create that agency around an offensive that is received on our part in crypto. And that agency also causes a lot of the maybe misinformation, if there is any, between traditional assets and assets in crypto and digital assets and such. And I think that's what networking, or at least, major financial players play off of, if they are, and if there is a play off of this sort of lack of understanding of agency between the issues and what we see in outside of crypto corporations and inside of crypto businesses and corporations, is that there's many degrees of removal in the traditional sectors from issues, right? In crypto, it's such a tiny industry, but it's so massively successful right now that it's under a microscope. And so the reason why I enjoy hearing CZ, soliloquy, as Stephen A would put it, monologue all over this stuff, is that he does it so well, and he does it with a brevity that doesn't take on a defensive type of tone that I often hear from other formidable and prominent people in crypto space. And not to say that is wrong, and oftentimes we like that, right? We like to hear a strong return voice. I'm not going to name any names, but CZ is very has navigated these legislative waters extremely well. So David Rubenstein, Carlyle Group.
Got into crypto very early when people thought that was terrible. He made a lot of money in that. It's obviously come down, but he still made a lot of money, still holds a lot of crypto. So those are good examples of people going against conventional wisdom.
What's an example where you went against conventional wisdom and it served you well?
Well, I started a private equity firm in Washington, D.C. People said you can't start a private equity firm in Washington because Washington is a government city. And I made it work with the help of a lot of others.
What's the secret if you're investing in Washington? If you're not following the lobbyist, what does make the difference? Why is it good to be there?
Well, in Washington, because we started in Washington, we were able to say correctly, I think we understand companies heavily affected by government. So aerospace defense companies or telecommunications companies, maybe we had a better understanding of those than people maybe in New York did. At least that's what we said, and I think it was probably true.
What about habits of successful investors? Anything all of these people have in common?
Yes, they're workaholics. There's nobody 9 to 5, just kind of coming in late, leaving early. No, these are workaholics. And for these people, investing is not work, it's pleasure. These people love what they're doing, and if they weren't making the enormous amounts of money that they're making, they'd still do it. This is not something that they really, at this point, need the money for. When you're worth $10 billion or $20 billion, you don't need to go in and work this hard, but they do because they love it.
And that's why I played this clip here. Other than the fact that David Rubenstein, here and there in public, he talks about crypto and how he's personally involved with his personal money on his personal time. And so on his book, he's promoting his book here on this show, CNBC, How to Invest Masters on the Craft. And he talks about the people that the normalities or the commonalities between the people that he talks to who are very successful in investing. And one thing though I wanted to highlight is that how he said that all these successful investors that he talked to, they all enjoy it, but they're workaholics. They're obsessed with it, but they enjoy it, right? They don't see it as work. And I think that's although I provided a contrast between 2 points where you have voices that are all incorporating and crypto voices where we're inside it and we're totally convicted, but we're sort of we tend to fall into the value trap, the narrow-minded value trap. However, that goes inherently in hand with being early and being convicted and enjoying it, right? Philosophically, if we're in it, that means we're here. Like we're doing this for bigger reasons than sometimes just gains. Although we want to make money, right? And you have to make money, and that's how you stay in this market. I want to continue to work from home, and how can I do that? I need to make money at this, right? And so I think what he's saying here, and maybe if we're really reading between the lines, and he's probably not saying this, but this is how I'm interpreting it, is that what's being unspokenly said here is that it's native, right? If you're early, if you're convicted, enjoying it and being value obsessed is native. And that's sort of becoming clear to me when we're reaching these really rock bottom periods with, in these what quote unquote bear markets where we're hiding in caves, is that it's natively an enjoyable thing. It's built in.
Learning about the discovery of oil when the Rockefellers and all of these guys started figuring out that the oil was going to make the world go round. Had you been an investor and a participant and understood what it could do and what businesses you could build across the network of oil or the mobile phone or the internet, the fortunes that were made, the changes that happened were so staggering, and this is happening faster. And at the very center of it is a system of money and value, which means that in itself, it is going to accrue value faster than anything else, because that's what it's actually doing. It's taking value from old places and putting it into a new place. So the opportunity set is so big, and it is that perfect nexus of macro and crypto, because the macro is so fucked, which we've known for so long. The massive debt, the bad demographics, the polarization of the world again, the deglobalization, the globalization, all the mess that caused. All of that is going on in macro land, which is pretty miserable. And here's the solution in front of our eyes. I mean, what a time to be alive. And that's why it's so important. Everybody needs to understand this stuff. Whether you're trading this stuff, building businesses, or you're just observing it, it is incredibly, incredibly important. Firstly, we're all learning together, and none of us know the answers.
Raoul Paul, another one of my favorites, especially since he's so pro crypto, makes it all the much more rewarding to listen to him. But yeah, so really, if you don't know Raoul Paul, you should listen to him. I know that he tends to be on the optimistic side, and maybe I don't see him as value focused as we're too inside of crypto. He's one that made his way before entering crypto, and I think he's very much all incorporated. What I really like to hear from him though is he's really well knowledgeable in providing contrasts from from different points of history in finance and how they relate to or can project results in current times. And so yeah, I think he's hitting the sweet spot, right, with yeah, with why we're in crypto, and why we're convicted and why we enjoy it. And and being in this bear market, why are we sweating through this, right?
Is it a coincidence that millionaire rhymes with bear? What if I told you that the best opportunities to achieve financial freedom in a relatively short period of time in crypto is actually during bear markets? Hello, I'm Crypto Casey, and in this video, we are going to explore why bear markets are more beneficial for us who have been in the space or are just now getting into the space than bull markets as long-term investors in cryptocurrency and blockchain technology. We will discuss strategies we can implement to take full advantage of opportunities bear markets present, run some numbers using historical price data to compare the most recent bear market versus the most recent bull market. And if you stick around to the end, I will share with you how I personally navigated this last bear market, which ultimately resulted in me becoming a multimillionaire by 28.
And so, Crypto Casey Another fun one, and you know we gotta have our women in here. And she's very insightful and very knowledgeable too. But this is a common thing. I'm sure we all hear this. And but aside from anything else, you know, if we're looking at it ideally, these are those times, right? These are the times when you want to be an investor, is getting in now at the bottom, or at least relative bottom, or nearing bottom. And so, I mean, you don't want to be buying on the way down. You usually kind of want to be buying as much as possible from the bottom and up. And yeah, and so, but these are the points in time when we need a little bit of a pickup. And so, this is ending on a happy note, right? And it should be fun. And more or less, this is a winning strategy, what she said, if we're looking at this idealistically. And I don't think that she's wrong. And I'm not saying that, I'm not playing this clip because saying that there's a contrast and it's a possibility that she is wrong. I mean, of course, again, idealistically speaking. However, you need to be careful. And what she mentioned about comparing price points and historical factors and macroeconomics and stuff like that. If you're serious about it and serious about making your way, and if you got in too early and now you're trying to make do with what you have left, you're trying to just survive or stay alive. The people that are in crypto are probably mostly major players. That's why we're seeing pretty big moves in market cap. And so they're taking this seriously. So if you're playing the ups and downs, you should be taking it seriously as well. But on the other hand, if you're a rock and roller, and you're a Rolling Stone, this is probably the best time to be a Rolling Stone and just roll with it. You're not trying to play the market. You're not trying to, decipher any kind of pattern. You're not looking for macro moves, micro moves. You're not trading, 4 hours or days or even weeks. You have your mindset, you're philosophically baked in. You're strapped on for the long one, and you're you got your seatbelt for Mars. So more or less, though, we need to have a exit strategy, and we also need to be looking at certain resources and considering all options, and deciding whether or not we have an all-incorporating view or we have a value-centric view, and that will determine our long-term versus mid-term versus short-term idealistic goals. If there are idealistic, are you trying to look to make money to stay in the market? Do you need to make money to stay in, or do you have something else that you're providing, you're producing revenue or income through, and you don't need to make money off of the current market in order to stay in it? Those are things that we should be looking at, right? And that's why I'm sharing these differences in opinions and approaches and perspectives throughout the crypto market currently. And that'll be it for the show. I hope you enjoyed it, and thank you. Trade safe. See you on the next one.